Yeah, so right now we have a points program just because we wanted to make sure everything was working well before we started putting token incentives on. And then once we TGE, which is right around the corner, we're going to be doing actual token incentives via liquidity mining. So our model is going to be similar to GMX.
Quick one, nothing here is financial advice. It's for entertainment and educational purposes only. Always do your own research or speak to a financial advisor before making any investment decisions. Enjoy the episode and like and subscribe.
Welcome back, everybody. We've got Devin from Gammaswap. If you've been in DeFi for any amount of time, you've heard of Gammaswap. Quite an ambitious project. Options, derivatives, all rolled into one, trading the volatility. Devin, welcome. It's good to have you. We originally covered Gammaswap in 2023 at the beginning of the year. Obviously been a lot of talk about what you guys have been doing, and true to DeFi blue chip potential you guys have been building. You've been freaking in the trenches doing your thing, and it seems like you're ready to unleash this thing. I mean, even though it has been live for a while, it's good to have you on. Long time coming, sir. Welcome.
Yeah, no, thank you for having me. We're huge fans of Blockmates and the research you guys put out. So excited to be on this and yeah, get featured again.
Yeah, man. I mean, I think it's there's a lot of credibility that goes into that kind of like trench DeFi building, and obviously you guys saw the bear, and give us a bit of kind of like history in terms of how this thing all started from a Gammaswap perspective, and then obviously your journey as well.
Yeah, so from a Gammaswap perspective, I'm one of the co-founders, by the way, so I'll just do a quick intro. Devin here, one of the co-founders. I do mostly BD and growth. My personal background was, I started out in Web 2 um, in Silicon Valley, just working for some startups in kind of a growth capacity, and then just saw Web 3 growing a lot. I had more passively invested in like Ethereum at that point, but really saw DeFi taking off, got interested, and then just wanted to join in some capacity. So I actually was kind of doing my own thing for a bit, and then I joined Figment. They do a lot of institutional staking and investment in some proof of stake blockchains. And then we were hosting a hackathon in 2022, mid 2022, and that's where I met the Gammaswap team. Thought what they were doing was really cool. I had provided liquidity in some AMMs, and yeah, I thought something that was kind of off there. Really wanted to see like kind of like a new iteration of a product that I enjoyed that maybe would give me different opportunities to be profitable and trade it. And then I really liked the team, so actually ended up joining instead of investing. So that was in 2022, and we've been working on it ever since. The inventor, who's the CEO of the labs team, his background was that he has been like in Wall Street all of his life. So he was a trader at Goldman and a few other firms, and then most recently was a quant at UBS. He's been involved in crypto since 2013. Was a quant until 2016 at UBS, and then left to trade his own strategies. And so he's been doing that full time. And then 2020, Uniswap V2 started to gain a lot of traction, and that was DeFi summer. There were a lot of incentives, and he thought they were one of the coolest things because although order books can be more capital efficient, one of the interesting things he noticed was sometimes in like these huge volatility events, there would be kind of like this phantom liquidity runs out, and AMMs, they were this really interesting innovation because it's essentially infinite liquidity. And then, of course, other benefits as well, being like completely permissionless, working even in low liquidity kind of like environments. And so he thought they were really cool, really great like addition to finance and something that works well in a decentralized way. But when those incentives went away, he started doing the math on providing liquidity and realized that a lot of these pools weren't actually very profitable. And so, his background was mostly in trading, so he actually wanted a way to short it, and realized there wasn't anything there, so started building it. And so he started posting some of his research end of 2021. Uh, Beginning of 2022, he actually started talking about the protocol specifically and how Uniswap behaves like an options market. And so his thesis was, when you are providing liquidity, you're selling volatility, and whenever the prices change, the token amounts that you're in the AMM is rebalancing, and it's actually replicating what option market makers do in traditional finance, except you don't have to be a sophisticated market maker. The algorithm will do it for you, and anyone can participate. Um, and how that is like an options market, but kind of like simplified. But so you have all these people selling volatility, but no one can actually buy it from them. And he felt like that's where a lot of the mispricing of the yield and the volatility was. And started. So we went to the hackathon 2022. That's where we met, joined, raised a seed round beginning of 2023, and then have been live for almost a year now. And so we have the protocol live now in this kind of initial capacity. There's a lot of improvements we want to make that I think will help grow the protocol substantially and make it more capital efficient. But definitely we'll focus on just kind of like the protocol generally, what we have today, and expand from there.
Cool, great intro. There's obviously a lot to unpack there. Let's start at the beginning and kind of like ask the simple question, like, from your perspective, in as simple terms as possible, what does Gammaswap do exactly?
Yeah, so in the simplest terms possible, uh, we are creating permissionless on-chain perpetual options markets, and essentially all that means is that we allow people to long volatility on any token through an AMM, and the actual way we do that is by borrowing liquidity from the AMMs.
So is it kind of like, is it by setting up liquidity pools that are representative of the particular token that's there, or is it kind of like stable coins? What are your primary liquidity provisions in that process?
Yeah, so right now we're doing it based on V2 pools, which I think are really simple and are great for like altcoins or meme coins because it enables more price discovery. But there is some restrictions on like the capital efficiency for something like stable to stable pairs. So it's typically, it's not something we have really that is out there, and not something we see getting much usage yet because of that. Uh, when we implement concentrated liquidity, which we're going to be doing in kind of a unique way, it's going to make those type of more stable-ish pairs a lot more viable. So it could be, like a USDE DAI pair. It could be a Lido staked ETH pool where people could long like the staking rate with leverage. So basically anything you think of, we could create a market for it. And I think there's really interesting use cases because any instance where you have two tokens that are going to change in price compared to each other, you have a reason to create like a market for that. And there's a reason someone might want to get leverage on those two tokens.
So, I mean, how does that? Okay, so let's look at options, kind of like as an isolated strategy. Um, how does options on its own, besides, okay, so we've got perpetual options, which is what you guys are doing. What is it? What are the differences here? I mean, it seems quite obvious. The one allows you to kind of like long and short with leverage. The other one's kind of like just a straight trade. Is there kind of like, is it like a fixed time? Is there a time limit on these on the perpetual side of it, like there is with options? Just walk us through kind of like similarities and differences between the two.
Yeah. So we try, I guess, to answer your question on the differences between perpetual options and a regular option, I would say is, yeah, I guess to take a step back, what we're essentially trying to do is abstract the complexity as much as possible, um, to make the protocol simple and allow people to interact with it in a really easy way. And as there's more liquidity, then advanced strategies will become more viable. So we could open up kind of like an advanced interface for people who do want to get a very specific type of exposure to be able to do that. But essentially, the difference, yeah, between a perpetual option uh, and a regular option is that there's no kind of like fixed expiration date. So I think one of the reasons like perpetuals work really well in crypto, like perpetual futures, is that uh, yeah, before there was actually like an inverse Bitcoin futures contract, and it had physical settlement and then multiple expiration dates. And the problem was is that that fragmented a lot of liquidity. So when Arthur Hayes created that perpetual swap, one, it aggregated all the liquidity into one contract, so it just made everything more liquid. And the second thing too is that he made it a bunch more capital efficient because there's no actual physical settlement. So there's just a funding rate that tracks this, that helps track the spot price, and so allowed people to get more leverage for way more cheap. And of course, now it's done like cumulatively trillions in volume. And so we think this is kind of like the perpetuals futures moment for options, because with options, not only do you have fragmentation across expiration date, but you also have fragmentation across strike price. And it's our belief that's why it's been very difficult for options to do well on chain. I think even now, conditions have been, trending more bullish. There's only about 200 million in TVL versus, perp futures or DeFi in general. It's kind of small, even though in TradeFi, actually, options has like 3x the open interest and volume of futures, and is a product that retail really enjoys using despite the complexity. So the difference is that there's no expiration date. What we're doing actually, and there's no liquidation price. Instead, we kind of have a what we call a time to liquidation. So it's an estimated duration of the loan of the option position uh, based on the current borrow rate and your LTV. But since it's perpetual, you can always add collateral to extend that and avoid, to extend the expiration date, essentially avoid liquidation. And then we also basically we can create any strike price from the AMM pool, a virtual strike price. So we abstract that all the way from the UI, all that from the UI right now, but a straddle is essentially at the money. So we're not doing any rebalancing. And then to create a virtual strike price, we'll change some of the collateral that's being borrowed either to the more volatile token or the more stable token. And that's how we can create things that look like calls and puts. But yeah, uh, with any strike price, just by rebalancing the collateral. And since all that is from the same pool, that's how we're reducing the fragmentation, which we feel like has been one factor that has made options growth a bit difficult, and one of the reasons Gammaswap can be, more scalable.
I have to ask this question. Why is it that traditional finance sees so much activity and volume on options, whereas crypto is yet to realize that potential that exists?
Yeah, so I think it's a good question. I think one of the biggest reasons that futures isn't as adopted as much as options is that the margin requirements are much higher. So you have to generally put up a decent amount of margin to be able to even trade these assets. And that's one of the reasons perpetual futures are a lot more popular, is that, yeah, the margin requirements are much lower. The second thing is that, yeah, futures are generally on assets that retail doesn't enjoy trading as much. So a lot of it's commodities and ETFs versus options, which of course are on, a lot of stocks. And then, I think you know, options are generally more expensive, but the liquidation, like the risk of losing all your money is lower. So it allows people to kind of like stay in the game longer if they're being very speculative instead of actually like hedging. So without any kind of like hedging, you don't have as much of like the typical risk, like much lower risk of being like margin call trading options because you're only risking like the premium. Um, and so I think in some ways, perpetual futures actually kind of fit, like they've done something interesting, and they also, have qualities that typically like retail would go for more on options. So they have like a lot of the markets. They can't support any asset, which is an advantage of Gammaswap, but they have a lot of the major assets. Retail likes to trade, and then they have kind of like low margin requirements. And yeah, with cross margining as well, you can kind of reduce that liquidation price. But I think there's some advantages to Gammaswap as well over like a typical perpetual feature that I think are interesting. But I mean, I think the biggest reason retail likes trading options, even though they're more complex, is that they're on every stock, and things like Nvidia, Tesla, you name it, it probably has an options market, and so it allows people to get that exposure. And now there's been more education on it. They realize, oh, I can actually get like a ton of leverage here, like especially with like the 0 day expiry options where the delta is super high. And then, be very speculative, but and yeah, you can kind of like a reduced, um, a lot more reduced risk than like the traditional feature.
I mean, this is kind of like how long is a piece of string kind of question, but like, isn't there this whole idea that like options is a good way to lose all your money really fast, even though the irony of it is that perpetuals are actually way worse. Like, so why is that? What's kind of like, why does that opinion generally, reside there?
Yeah, I think it depends how you look at it. So I think perpetual futures are kind of different than regular futures. So typically, you're not going to get, you can't lose more than you put up like in a traditional future. So you typically, unless you're cross margining, so typically you're only exposed to that deposit for that specific position. And since everything's over collateralized, you don't have um, some of the same benefits of an option versus like a traditional future. I think the thing with options is that they're non-linear. So you get rewarded a lot for the upside. And the more right you are, kind of the more rewarded you are. And then on the downside, after a certain point, it's basically like zero, your P&L. And they can be much more expensive to hold because of the theta that's there. Um, but yeah, you're not risking as much. So I think perpetual futures have lowered that margin requirement, which is like a huge advantage, or that risk of kind of like, some of the same risk of putting out margin. But some of the advantages of option, like for example, with perpetual futures, if you're going to get something with a really high like leverage, like a high delta, I mean, honestly, like anything over 5x with the type of volatility you see in crypto, even on a blue chip, like you could wake up the next day and be liquidated from price movements. And so I think where Gammaswap is right now is that a lot of people actually like coming to us in those moments of volatility, like the ETH ETF and other kind of events like that, where maybe there's going to be volatility, but you don't know what way it's going to go, and you can open up a straddle or a long and not worried about being liquidated from price. I think, the one area we can improve on, which we will be doing soon, is capital efficiency. So reducing the funding rates dramatically and then getting similar kind of leverage to perpetual futures, so like 50x plus without a liquidation price. And then I think the trade-offs are going to really make sense because it's like, okay, in a perp future, I think it's going to start mimicking TradeFi a lot because you have perp features where it's much less expensive to hold, uh, but if you really try ramping up the leverage, your price based liquidation risk is high. Versus in something like Gammaswap, in this like V2 that we're working towards pretty closely, you could get a really high delta and you're going to pay a lot for it, but you're not going to get worried about being liquidated from price. So now we're kind of, we have strategies that work, if you're fine with like 1 to 3x leverage initially, maybe 10x max, um, that are kind of like straddles, for example. So I think a lot of people like trading down ETH. The leverage isn't super high though, but like things like Pendle, for example, I always see it's like one of the highest utilized pools by traders because people just know it's going to be volatile, and they think, like, especially if they come into like an event where a lot of like markets are maturing, for example, they'll come in and open up a straddle and then they can profit off that. And because these altcoins, you don't really need much leverage, you can end up profiting like quite a bit off those events.
What is the connection between like a protocol like Pendle and Gammaswap? Are you guys actually utilizing those liquidity pools? I mean, what is the kind of the dynamic that exists between the two, if there is at all a dynamic?
Yeah. I'll answer that question in 2 ways, actually. So the first question is, we since Gammaswap's permissionless, we can create an options market on anything. So
Okay.
a lot of people like these PT assets because, you have exposure to ETH, but you're actually earning a really high yield on it, like 15 to 20% fixed, and then they could basically provide it in Gammaswap and earn extra yield. And then volatility traders like it as well because they could earn some points for having exposure to that. And also, those PT assets are moving. Like, that's how the yield is actually being transferred to the owners, that it's increasing in price. So that's extra volatility that the volatility traders can use. So I think it's an example of one of the reasons why we focus so much on composability, because a lot of the products I've seen do well, like Pendle, GMX, LP assets, what have you, rely on composability, EigenLayer, EtherFi. So that's something that, although we like a lot of things about UniV3, that's something we wanted to keep. And so every product we put out there for the LPs is going to always be have composability in mind, always be composable, and something we wanted to keep true. And also one of the reasons why we wanted to kind of start out with this V2 version. And then to answer your question in a different way, which I think is kind of something I think about more, I guess, as like a builder, is I think about like what is something that exists in TradFi that could be on chain, more decentralized, and perhaps like even better than its TradFi equivalent. And so what I think Pendle, there's some similarities between Pendle and Gammaswap. One, I think we're both a bit complex. Another thing is, Pendle was also created in DeFi Summer. They wanted a way to get the fixed yield on those like AMM pools that had the crazy yield, and we wanted a way to short it. So two kind of different ways, but looking at kind of like similar things. And then I think the third thing is, we both saw these like massive markets in TradFi that should be on chain, but you can't. I think the mistake people make is looking at TradFi and just doing the same thing in DeFi, and it just doesn't work that way. There's different users, there's different challenges, and so what they did is they created basically like interest rate swaps, which actually is the biggest derivative market. I think they have like something crazy, like I don't know, like hundreds of trillions of dollars in like open interest. A lot of it's done like OTC, but it's basically like the largest derivatives market that exists. It's just not all maybe in like the lit markets or in like retail facing. And they took that on chain, and they did it in a way, they did it in this like form of yield trading that's composable. They've simplified it a lot from their initial versions and made it more capital efficient. And now it's something that people really enjoy using. And I'm super bullish on Pendle V3. I think there's going to be a lot of product market fit there. Not financial advice, but from like a builder perspective, I think that version is going to be really interesting. And so I think Gammaswap, we've seen something similar. It's like, okay, you have this massive market in TradFi where retail loves trading these things. It's bigger than futures, at least in the traditional form, uh, TradFi form. And then, it offers, generally offers like more types of assets and different types of exposure, which could be interesting for some users. And we found a way to make it more DeFi native, which is okay. Let's not try to just do it the way it exists in TradFi with all these different strikes and expirations and using an order book or a pool, but making it look a lot like TradFi. Like let's just do it in a different way. And I think the way that we think makes sense, which is kind of similar to perpetual futures, is doing it in this like perpetual format where you're reducing that fragmentation. And there's also some similarities between perpetual options and perpetual futures. For example, like a perpetual future isn't even a future. You don't even, with a future, what you're trading is the basically the obligation to buy an asset by a certain date. But with perpetual futures, there's no actual buying of assets. It's all virtual. And so I think you have a similar thing with Gammaswap. There's no right or obligation to buy an asset by a certain date, but you're mimicking that exposure that people like, and you're doing it in a much more simple way and a much more usable way in DeFi. So, that was kind of a long-winded thing, but I think, there's all these markets in TradFi that should exist in DeFi, but they're not going to look the same. They're going to look a little bit different, a little bit weird, and because everything in DeFi is different.
Yeah, I mean, I think the big thing for me as a user in DeFi is it's quite simple really, and you really you brought up probably like the most important thing, in your delivery there, and it's kind of like, like users are very different in DeFi, and the crypto native DeFi user particularly like thinks about things in a very different way. Like, so one of the examples which I want to illustrate is, like I'm only really interested in a product right now because of where we are in this evolutionary process, where I question, where does the opportunity lie for me? Like I'm not particularly like that interested in the product itself, even though I'm more interested in the product itself based on the potential that it offers me in order to make money. And I know that that's kind of almost counterintuitive to the process of building, because the process of building is, what are we trying to replicate? And then from that point onwards, how do we make it more efficient? And then from that point onwards, how do we make it more efficient from a delivery, from an experience, from all of those kind of things, right? Because it's not like in the traditional finance where people have time and it's like, they can kind of like waste time in order to deliver. This is kind of like a one-stop shop. I want to do this and it needs to work, and it needs to work first time, otherwise the person isn't going to come back. And all those different kind of like levers and pulls and pushes that play into this whole thing. The single most important thing, I think, for the majority of DeFi users is like, how can I make money using this protocol? And more importantly, can I keep that money and can I keep doing it? And I think those are the two like really big things. Long way of getting to the point. And the question is, how does Gammaswap provide an opportunity for users to do that? I mean, I know that could be viewed as like quite a simple answer, but maybe it isn't so simple. Like, where does the value lie with Gammaswap, and how are you guys looking at that dynamic?
Yeah, so I definitely agree. Like, I think most users come to crypto to make money, right? I
Yeah.
think that's why a lot of us start. And also, yeah, it's one of the great things about it is that, yeah, you don't need an account in a bank somewhere. You don't need to go through this whole process to get access to these markets. They're available to everyone at any time. And yeah, that's what I love about it. So to talk about how you could, yeah, get yield or profit or earn like any money using Gammaswap, I guess I'll separate it into two kind of like different parties. So I think there's the people who like earning yields, and then there are people who like trading with leverage. So the people who like earning yields more passively, I think, you're going to find it very similar to like a typical AMM pool, like a V2 pool. You provide liquidity in a 50-50 ratio. And then if the price moves, you have some impermanent loss exposure, but with V2 not being super high. And then you're paid a yield for that risk. And hopefully that yield should compensate you for your IL risk. If it is, it's a good trade. If not, not so much. So we really focus on liquidity providers because I think you need liquidity to allow people to trade with leverage. And so in terms of the way we do, like creating the mechanism, that's something we focus on. So one of the advantages I think we have over other AMMs is that when volatility increases, it's more profitable for traders to actually come in and borrow that liquidity. And what they're doing when they open a perpetual option position is that they're paying the LP position. They burn the LP position, and we hold it as collateral in our smart contracts. And if there's any volatility, that collateral can be reminted to the LP, and then they keep the extra collateral minus the interest rate. And in the interest rate, it's a combination of the swap fees the LP position would have earned, plus additional volatility, like borrow fees, based on the utilization of the pool. So when volatility is higher, that type of trading is, of course, more profitable. So they're incentivized to come in and pay you a higher yield. And so one of the things we found, and you can look at our pools in DeFi Llama, we're going to share more research about this as well. We've shared some, I think, on Twitter, but is that, generally the APYs are very high, and they're particularly high in those periods of volatility because people are coming in to trade those events. So, you have a yield that theoretically should scale better with your IL risk. And not just theoretically, it's something we found, empirically already, depending on the pool. And then for leverage traders, you're basically getting leverage in a completely new way. So I think perpetual features are great because you can really leverage everything up. In our V1 version, the leverage is modest, but you're going to get really interesting exposure that hasn't been available to you before, which you can lower your risk substantially or just get different types of trades. So I think, one of the most differentiated ones is, of course, the straddle. So with a straddle, you profit if the price increases or decreases, and you're just paying a borrow rate for that. You don't have any price-based liquidation risk or even price risk. Now, it's not infinite profits. The risk that you're taking is that the borrow rate could be higher than the volatility. And so you're making a bet that the volatility is going to be higher than that rate you're paying. And so, I was kind of mentioning before with ETH, I definitely think a straddle makes sense in specific events. And then in something like an altcoin, which can move a lot, and Pendle is a blue chip, but it's also still super volatile. So it's a way to come in and profit off that volatility without that price risk. You're going to pay more than a perp or long or short in Gammaswap, but you're getting really unique exposure. And so I would say you don't have as crazy of returns as a perp feature, unless maybe it's something like a meme coin. But you have trades that you can kind of just pick off and earn some fees on from when there's some volatility events, whatever event you can think of could be a good time to trade it. So ETF, We talked about Pendle PTs expiring, maybe a new partnership for a protocol, announcement on the roadmap, anything, right? Anything where you think there could be volatility, you can come in. And I think one of the interesting things about trading is that often, sometimes it's easy to predict that the price will move, but it's hard to predict where it'll move. And I think like the ETFs were a great example of that, because a lot of people thought they were going to be very bullish after. And actually, in both the BTC and ETH ETF, there was this huge price appreciation on the approval. But then when the actual ETF went live, it dumped. Sell the news event. And then actually, yeah, well, the BTC one regained all-time highs, and now things are a little bit. ETH is regaining some of its losses, so it's on a similar trend. Not to say where it'll go, but at least right now it seems to be on a similar trend. So I think, and then if there's another ETF, it could look like that, or it could look completely different. But I think the one thing that's guaranteed is volatility. So this is a way to just trade volatility purely, and get kind of like a different type of exposure. That's really interesting. In the long and short, these are actually straddles that are balanced to look like calls or puts. So what we're doing is we're in the long, we're balancing the collateral. So instead of being in a 50-50 ratio, it's 66% the volatile asset, 33% the stable. So you have more exposure to the volatile asset, and that's why it looks more like a call. So you're going to get more leverage if the price goes up. And then, you could lose some money if it goes down. But if the price moves against you far enough, like negative 50 or 60%, you'll actually start to profit again. So maybe for ETH, that doesn't make sense. But for an altcoin or meme coin, it could make a lot of sense to have that kind of like protection. And then the opposite for a short, weighted 66% towards the stable, and then more leverage, but also some risk if the price increases. But no liquidation prices for any of these things. So, it's a way to kind of have a different type of risk profile and get a more pure play like volatility trade.
So that's obviously the trading side of it, and thanks for a very thorough explanation on kind of like straddles, long shorts, and the dynamics that are there. What about people who want to participate in the protocol from an incentive perspective beyond just yields? I mean, I would assume that there is kind of like a real yield motivation for users to come in, and I want to chat about obviously your TGE, because that's obviously coming up. You mentioned it at the beginning of our interview, and it's like there's a token, and you guys have obviously found a product market fit for this thing over the last year or so, year and a half, and it's kind of like, okay, well, how are we going to now put relevance to a token? And I really want to get into that, but just kicking it off around incentives, and so we've obviously got the yield. What else is there, and how are you guys planning to kind of get that stickiness on users and keeping them there?
Yeah, so right now we have a points program just because we wanted to make sure everything was working well before we started putting token incentives on. And then once we TGE, which is right around the corner, we're going to be doing actual token incentives via liquidity mining. So our model is going to be similar to GMX, except the vesting period is going to be much shorter, around 30 days. So you'll earn our token in escrowed form, and then you can either vest it over 30 days, or you could stake it for more escrow GS rewards, 30% of our protocol revenue distributed in ETH, and then multiplier points, which would give you a higher percentage, higher APR on that ETH revenue. And that's how we're going to be planning to incentivize things as well. So kind of some traditional liquidity mining, and then you're getting that yield actually in that token plus the natural yield of the pool. And then I think we have even bigger plans for our token. Like we have a way where maybe it's not just a governance token that gives you like some protocol revenue, but it's going to be something that's actually going to be like integral for the functioning of the protocol. So beyond like a typical governance token, and still, of course, earning a yield by staking it. So it has some interesting things down the line, but that's what's immediately going to be available as incentives, and then what's immediately available is rewards for staking.
Yeah, I think it's really important that any protocol, especially one like you guys, that has found a product market fit, you've got to put your token to use. There's got to be like a functional benefit, whether it's to attract liquidity, whether it's to, reward. This whole idea around governance, I think that's all over now. From my opinion,
Yeah.
from my side of things, what I've seen, especially like on high emission tokens and, those kind of tokenomics, I don't think it's sustainable. We know it's not, and I don't think it's practical, more importantly. So, yeah, well done for, obviously having that perspective. Clearly have spent enough time in DeFi to learn that lesson. So tell us about your roadmap specifically around kind of like TGE, and whatever else you think is kind of pertinent to this journey that you guys have traveled, and what does it look like for the future?
Yeah. So yeah, great question. So we're about to do our TGE soon, which will the initial float will be a combination of an LBP, which we're going to self-host, and then an airdrop to protocol users, and then after that, what I mentioned, liquidity mining and staking. So yeah, stay tuned. I would say for announcements regarding those, because all those are going to be. We have a bunch more kind of like information that we're going to be sharing on those really soon over the next couple of weeks, and should all hopefully be live end of August. Everything seems to be working fine. Cross our fingers on testnet.
Yeah.
So should be able to get that out soon. And then in terms of like the product vision, well, I think the biggest thing is, V2 pools are they actually they tend to have more liquidity than the V3 pools, because I think they're kind of composable and simple and like 10x the token pairs. But of course, V3 has all the capital efficiency, has all the leverage, so you can earn a higher yield as an LP. So this product we're still kind of like in the new stages of developing, but I think it's something we could have in the next quarter, is a way to drastically increase the capital efficiency for the traders. And what we're going to be doing is actually turning UniV3 on its head. So we're going to have UniV3 for the traders, where they're going to be able to get that leverage up to 50x, and it's going to look kind of like a regular call or put. And then the LPs are still going to LP into something that's composable and looking like V2 with similar IL. The only additional risk will be similar to like GMX. If a lot of the traders are profitable, then you might have to pay out those traders. But generally, what we've seen across all leverage products is that, of course, there's like 10 or 20% of users that are very profitable, and then on average, they tend not to be profitable. So I don't know if we've ever seen an event really where like there had been a big payout from LPs in something like GMX. So that's going to be an interesting one. Obviously, different risk profile, but it's going to allow much more leverage for the traders. And then, we have another version as well, which would actually concentrate the liquidity for the LPs as well, but in a fully composable way, and just a bunch of other things we want to work on. So I think we found some initial PMF. I think we really need to. I think the liquidity incentives will help scale up this initial version, and then I think as we kind of like add capital efficiency, we can attract an increasingly like larger cohort of like users and traders to the platform. So I would say, this initial version, some initial product market fit, but really looking at ways that we can scale this up to be, something like hopefully very like sizable and usable for the majority of DeFi users.
Yeah, I think it's like like for me, it's like, how is the easiest and best approach to kind of like get into what it is that you guys are doing, like from a community side of things. Like it doesn't matter where you go, like in DeFi there's obviously like a pretty strong community, and I think you guys have that. So from a social side of things, obviously Discord, is that where you guys predominantly hang out? Is that like the main feature? It's not like a Telegram centric protocol, it's Discord, right?
Yeah.
Okay.
Yeah, so we're primarily in Discord. So if you have any questions, like if you're using the protocol and have any questions, we generally try to respond to everyone pretty fast in there. So you can expect a response pretty quickly, and can go as deep as you want to, but want to make sure everyone who comes and like tries it out can get a good understanding of how to use it, and yeah, uh, and answer any questions they have, and then that's also where the community mostly is. I think also, Twitter is a great way to stay like up to date with announcements as well. But if you want to
Cool.
ask any direct questions, Discord is probably the best way to ask those.
Yeah, I want to just revisit the question that I asked earlier, and just with pertaining to, where does the value lie in the protocol? You guys first of all have like a super cool blog, and one of the articles that was written, um, is how to profit from volatility with Gammaswap. So what I'll do is I'll put that article, in at the bottom of this video. And yeah, you guys, if you have ever wondered about options and like what the hell is going on here, I think this article is super cool. I mean, I think it does get into the weeds of things, but I think if you gave it an opportunity, there's a lot of like, there's a lot of takeaways there that won't only benefit you from an options perspective, but I think, how does DeFi work? How does liquidity get provisioned? How do the pairs work together? Impermanent loss, what does that mean? How do you trade that volatility within, the context of impermanent loss and the pairs that you have within liquidity pools? So it's not just like the value doesn't just lie in the strategy on how to make money on the volatility of, impermanent loss. It's more around like, how the hell does this thing actually work? So I really
Yeah,
recommend that, yeah, people who are listening to this, go and check out the link that I will post in here. But if you don't, for some reason, click on the link, just go to gammaswap.com, or even just type in Gammaswap blog and it'll take you to the page. It's super easy, and it's the most recent article that they wrote. And a dumbass like me can understand what's going on here. So I promise you, anyone who goes here, you'll know exactly what's going on. So I strongly recommend that. Um, yeah, I mean, you've given like super good like insight in terms of what it is that you guys are doing, and obviously appreciate that. Very important when token TGE tell us so we can write it down and yeah, be ready for that. I'm really looking forward to your launch. I think you guys, it's net positive, and yeah, I think you guys have done the hard yards. So I think you guys will do well. So tell us when and where.
yeah. So we're aiming, I think, mid to end of August latest, and then where uh, Arbitrum, we're using layer zero, so we're going to end up being on a few chains, but we're starting with Arbitrum, and then where you could actually get the token. So yeah, if you have used the protocol, there might be some things available for you. And then the LBP is also a way to, of course, just acquire GS, whether you're eligible or not for the airdrop. And yeah, that's something to stay on tune for. So we're going to be making more announcements regarding that, some tutorials on how to use it, and then we'll be sharing, within our community on Twitter as well. And then just to kind of go back to, how to learn the protocol, I think something we're going to add soon to the app is like the testnet version. So you could try it, but I think my recommendation to people to learn how to use it is just maybe try it out with a small amount of money. Like I think the minimum collateral requirement can be on some pools as low as like $1 or $2 on Arbitrum. You can get really cheap. So um, yeah, maybe because we have a lot of the graphs there. So if you put a deposit in and mess with the slider, you can see how your exposure changes, your funding rate, what your time to liquidation will be. And then some of these things, are kind of variable though. So if you put down like a very small amount of collateral and just want to see kind of like what happens and stay on track with the trade, I think you end up learning a lot that way. But yeah, I think it also would be good for people to even try some of this stuff on testnet before. I mean, I think the problem with testnet is that it's not always real market conditions, so you don't really see how like the rate's going to change based on other things. But if you just want to use the platform and see what happens after you enter a trade, like could be a good way to do that. So we'll definitely be pushing that to the app as well for some users to kind of get started before actually doing it in like with real money or real assets.
Okay, before I let you go, last question. When you think about Gammaswap and kind of the work that you guys have put in, like what would your ideal scenario be for the future for the protocol?
Yeah, I mean, I think my ideal scenario is that we become something that, yeah, like a large amount of users will find value in. I think that's like the goal of any builder. I think so. I hope Gammaswap can play a part in that. But what I see for the future is that DeFi is going to become like inevitable and really massive, and all of these industries that we have in TradFi are going to be on chain, and eventually, with more liquidity and better, just because, yeah, you're not just limited to one market. It's permissionless. It's more decentralized. It should end up becoming like the dominant thing. I think it's going to take a while for that to fully realize, but I think we're going to get closer and closer to that. And so I think it's going to happen. Like I think there is going to be an options market on chain, and it's going to look a little different than TradFi. And I think we have a good implementation of that, and we're working towards making everything even more efficient. So I hope we're that, but I think DeFi is going to continue to grow and it's going to exist in some capacity. So I'd like for us to be it, but I think it's going to be there regardless. Whatever is the right implementation, I think will exist and thrive. So we're kind of working towards that. But my hope would be to, I think I'm pretty confident this will happen. But my hope will be to see DeFi like grow massively than it already has, and for there to be just a wider plethora of derivatives and asset markets that is more similar to TradFi or with some of those markets that have already seen success, but of course like beyond with things that haven't existed before, different types of assets. We've already seen that, but I think we're going to continue to see that really explode.
Yeah, I mean, one step at a time, and you guys have taken quite a few already, and there's no reason why you guys won't get there. So yeah, here's to getting there and hopefully being one of the blue chips. Obviously not easy, but I think if you keep going, I won't be surprised if you guys make it. Devin, yeah, it's been really cool to chat to you, and obviously went deep in some aspects of what you guys are doing, but I think it's important to do that. I hope for anyone who's been listening that you have a better understanding in terms of obviously what Gammaswap are doing, but more importantly, like what options are, and like I said, like if you've wondered about options, I think Gammaswap is like a really good place to check out. Website's super slick. It's very, very obvious, what it is that you need to do and how to do it. I think they've spent a tremendous amount of time on the UI UX of it. So yeah, I think it's kind of obvious. So just check it out. I do believe that options will be massive in DeFi. I think it has taken a long time because it's not the most straightforward thing, but at the same time, I don't think UI UX has been a big priority, but I think you guys have changed that. So yeah, good luck. And once again, thanks for joining us. And look forward to seeing how your TGE goes and the rest of kind of like your journey going into the year.
Awesome. Yeah, appreciate that. Thank you for having me, and yeah, continuing to put out great research. And
Thank you.
I think a lot of people are, much better off for having blockmates out there, because it's hard to navigate all of these things, and especially when there's so much new things coming out. Some of them make sense, some of them don't, and they're kind of hard to figure out anyways. So I think it's really good that we have like a research firm that's actually focusing on like kind of like the bleeding edge of the industry,
And
because I
also,
think
and
yeah
also
that's
going out there and getting wrecked on behalf of
what
figuring
yeah
it all out. Yeah.
well,
Which,
that's how everyone gets started
yeah.
and
Cool.
continues the experience at some points.
Cool, Devin. Thanks for the kind words. Really do appreciate it. And yeah, take it easy, man. All the best.
All right, thank you.
Just to everyone listening, please like and subscribe, and yeah, tell your friends, share the video, and yeah, see you guys out there, and take it easy.
All right, thanks for listening. If you enjoyed the show, please give us a like, subscribe, and turn the notification bell on for next time. See ya.